Welcome, ladies and gentlemen, to Commodity TV, and we want to do an online update interview with Discovery Metals, and we have Taj Singh here, the CEO of the company. Taj, good morning to Toronto. How are you doing?
Thank you for having us, Johan. Good to see you again.
Yeah, good to see you, my friend. And first of all, congratulations. Jesus Christ, you are catched up now with almost 100 million Canadian dollars. I think this is outstanding through a warrant exercise. So, of course, the first question to me is, what you going to do with the money?
Yes, actually, it may not, investors may not realize, but getting through those warrants, over 30 million warrants, is a huge positive event for the company. We were able to, obviously, when a warrant expiration is coming, they were all in the money. There's quite a bit of pressure on the stock. We moved easily through those. Stock stayed steady. And since those have expired last week, we've seen some very good price appreciation. But what it is it's really loaded up our treasury. And now we're close to $100 million Canadian. That's more than enough to get us to a construction decision. And it actually will probably allow us to have a significant portion of the equity portion of for the capital for the build of this project. So really gives us the ability again to really explore, aggressively advance this project, which is a huge system. As people are starting to realize, it already has a lot of drill meters in it, which has de-risked it, but it needs a lot more to really test the true potential of it.
Okay, super. So you will accelerate, you will drill more, you will maybe go to more specific targets or look over the edge, what is there. Yeah, so it gives you a great position for the future, right?
Correct, exactly. Yeah, we're able to accelerate. We have 4 rigs going. We're going to try to take that to 6 or 8 rigs, even accelerate things. And obviously resource and PEA this year, then boom, PFS next year, potentially even maybe going directly to an FS. So this really puts us in a good position to be able to move quickly. And as you know, silver price moves quick. We've all seen it. We're already cashed up, ready to go. We can accelerate things.
Exactly. Yeah, fantastic. So let's talk about the bulk tonnage first. You have a expanded drill program of altogether, I think it's 65,000 meters. You have done already approximately 50,000 meters, and you want to do a new resource update and also the PEA. Furthermore, we saw in your news fantastic 131 meters with 118 grams silver equivalent in only 49 meters depths, and 85 meters with 175 grams silver equivalent. So the question for me is, first of all, what does the bulk tonnage now look like after those fantastic drill results? And where would you rate, as I know you are a fantastic geologist, what does it mean for you widths, grade and depths wise? Where do you see, let's say, economic grades? What would be like a minimum you need to have, because bulk tonnage is open pit, right?
Correct, exactly. It's all open pit, yeah. So basically, Johan, your first question is what has basically how we progressed on the open pit target. So the open pit is really the engine room, the current engine room of this project. We'll talk about the veins later. That's more of an exploration potential to sweeten the open pit because it's nearby. But just strictly talking about the open pit, which also we call the bulk tonnage, we've been able to drastically increase the size of the high-grade bulk tonnage zone, if you will. That zone has almost tripled since we've acquired the project in a little over a year. We've been drilling it a lot. And now you're talking about a strike length of almost 2 kilometers, about close to a kilometer kind of wide, 500 meters to a kilometer wide. It's a very, very large project. And that's just the high-grade portion of this bulk tonnage. So we've increased the size of that substantially. Just in this last release, we actually added a significant portion in the south corridor, the northeast portion of the south corridor, added a significant expansion. It was a bit of a positive surprise for us. We kind of thought we had our footprint. We added a significant amount of tons of ore there as we expand outside of the footprint. So we continue to show that as you drill this, the system is getting larger and larger, and the grade is continuing to stay high, and in fact, in a lot of cases, increasing. When you talk about kind of what's economic, in our last release, we had several intercepts, which were fantastic. If you look at them from a gram meters kind of point of view, you multiply them and you're something like 5,000 gram per ton meters, 10,000, those are fantastic results. And we had many much more than that just in that one release, and we've continued to do that. So the kind of grade that we feel that would work at $18 silver is about 50 gram per ton silver equivalent. Then as you move up, you know, silver's kind of where it is at a spot, you probably could lower that pretty substantially and obviously increase tonnage. Again, our focus, I want to point out, is a project, when we took over this project, is to make a project that works at $20 silver. And all the rest is kind of upside. The good thing about that is the ability to expand is quite easy with this project, because you've got a high grade core, then a medium grade, then a lower grade. You can continue to expand as you pay capex off, or as silver price increases, you can really accelerate your throughputs and make the project very, very large.
That's interesting. Super. So you said like the calculation is grams silver equivalent times the meters, and this has to be 5,000.
Yeah, that's a good
approximately.
Exactly. Like for example, in gold, typically that number is 100, right? That's all.
Exactly.
Exactly. So in silver, if you work out the ratio, it comes to about 5,000, which is a very good hit. But it's extremely encouraging, because as we drill, we're just continuing to see the entire hole is mineralized very continuously. You know, 50 meters, 60 meters, 100 meters, 120 meters of very, very good, like high grade ore for the entire interval. So we're very encouraging to see that.
Super, perfect. So you are on an extremely good path, I would call it.
Yeah,
great.
It's very strong, and we're in a very favorable position. Yeah.
Yeah, absolutely. And I think the markets are moving in the right direction. It looks to me like that's maybe not the silver squeeze to 1,000. I'm not sure if this happens, but I would say a $50 target for the next 2 years is very foreseeable, I would call it. Okay, you have two concepts. One is the bulk tonnage, which we spoke about already, within the east and the northeast of those mineralized corridors. And the second one is to test the widths and the grades, and of course the continuity of your extensive high-grade vein systems, which are transecting the deposit. Maybe you can give us a bit more light into that, what it means now aside of the bulk tonnage, and also maybe in the light that you have that much money that you are going now full throttle on both concepts.
Yeah, that's a good question, and there was a question you had posed before that I hadn't gotten to, and very simply, our phase 1 drill program, which basically lasted from late 2019 all the way to about April of this year. That will be all the drilling that will go into the new resource to come out in the summer. So that's phase 1, 65,000 meters. That was expanded twice. It was originally 45,000, then 55, and now it's 65 because of the results we got, the positive results. Within that 65,000 meters, 80% of it or so is for the open pit, the bulk tonnage. And we just began with the remaining meters out of that, testing the veins and really kind of define some skeletons and more testing the potential of it. Okay, so that's that. Then seamlessly, as phase 1 drilling ends in April, you'll be able to continue phase 2 drilling. Phase 2 drilling is for the PFS. That would be a combination of infill drilling the pit, de-risking it that way, maybe seeing if there's any possible expansions, either at depth or laterally or along strike, that's kind of very efficient kinds of expansions. And then also testing the veins in more detail. So that's what I just wanted to put some context in what the meters are. And so this total number of meters for 2021 is roughly about 70,000 meters. And so about 1/3 of that is for the phase 1, and the rest of it's for phase 2. The point I'm making is drill results will continue through the year seamlessly. Even as we put our resource and PE out, drill results will continue. Every 3-4 weeks, we'll be putting out releases. For the vein part of the story, these veins, these very high-grade veins that come to surface. We've identified over 5 kilometers of them that flank the high-grade open pit. So you've kind of now got a high-grade open pit. You know, when a mine eventually gets going, you've already got your plant built, and you feed in 500 ton per day or 1,000 ton per day of underground, very high-grade veins. You'll see significant margin expansion. So it's really a sweetener. The open pit is the engine room. The high-grade veins, if they work, will be a significant sweetener. And listen, we've already, for example, in one of the vein trends we know is called the Todos Santos vein. We've already identified, based on our drilling and historic workings, about 1.5 kilometers. It's already down to 350 meters of depth. every time we've hit it, every time we went to test it, we've hit it. So the continuities.
What a luxury problem.
I know. It's something that's very encouraging to see. Yeah. But you're talking about 20, 25, 30 ounce per ton silver equivalent material. You add that on, even in small throughputs, and it really can sweeten up the economics. And the key point of that is we were figuring out whether or not we're going to put that into the upcoming resource in PEA. And we won't, because we won't have drilled the veins enough to really feel confident enough in terms of the spacing, the drill spacing, to be able to put them in the mine plan and feel comfortable with them. But this PEA coming up will focus on this high-grade open pit, and then the veins will come through in the PFS for next year.
Okay, super. So when do you think we see the resource estimate and the PEA, and then the PFS?
So if you kind of lay it out, you're looking at a resource in early Q3 this year. And then about a quarter later, you'll have the updated PEA. And then roughly about a year from then, maybe faster, will be the PFS. And again, we will be what we have to understand here is this is not a classic PEA. This project has already been drilled a lot. It's already had a resource. It's already had a PEA. It's not a classic arm-waving PEA. Oh, this could be this. This is a very de-risked, we're calling it a PEA plus. It's almost on the lines of being a PFS. The metallurgy we're targeting PFS level. The resource, you're going to have a vast majority of it in the indicated category and above, so already de-risked. And a lot of the other items we're going to be focusing on having as a PFS quality, not a classic PEA kind of standard. So our ability then to go to a PFS is a lot faster. We can accelerate that. Or we step back and say, well, you could probably even go right to a DFS, a feasibility study, and we may consider that. So that'll all come out as we continue our analysis internally.
Okay, super. So it looks like a very busy year with that much drilling and a lot of news flow. So when can we expect the next news?
Probably within the next couple of weeks. We'll be putting out drill results. Yeah. And then we'll continue every 3-4 weeks drill results. So metallurgy results will follow in Q2. So yeah, listen, last year was very busy. This year's even busier. I really think it's going to be a transformational year for the company. We're very encouraged by what we're seeing, and having nice tailwinds in the silver price has been great too.
And the $100 million you have, let's call it $100 million in the bank, that would be enough to really do the production decision, and then you go to a project finance, right?
Yeah. If you look at rough high level kind of modeling, it would take us all the way to construction decision, and we probably still have a good amount of treasury data, whether it's 60, whether it's 70 million dollars or so, and then the rest you could, we're just contemplating at this level right now, not digging into it, but yeah, the rest you get with project financing, and you'd be ready to go.
Super. So that means almost the risk is gone, and you can go full throttle. I love that. Great. Super. Taj, thank you very much. It was a great update. Again, congratulations. Well done. And it's always fantastic when you are entering, let's say, the development phase, I would call it already, on your level, and with so much cash in the bank and such fantastic shareholders. And yeah, you can really let it go, and we want to see a mine there.
Beautiful. No, I thank you. I appreciate it. It's we've been executing on our plan, and I will say that it's the world's largest development stage silver project in the world, and it's a really good position to be in, I'll tell you that.
Absolutely. Super. I know why I'm a shareholder. Thank you very much, Taj. All the best to you.
Cheers. Thank you, Jochen.
Thank you. Yeah, ladies and gentlemen, that was Taj Singh, the CEO of Discovery Metals. And you heard it, $100 million Canadian almost in the bank through warrant exercise, which came in this week. And yeah, they are well cashed up now. They can go full throttle until the production decision and still will have a lot of cash left. And this is exactly how we love it, because this project is so well drilled, and they drill again altogether 70,000 meters this year. So I think the risk is almost gone, to be honest. And the most risk, the highest risk, is the silver price alone, and maybe the metals prices by themselves. But this is something what we really can handle. And as we see much higher silver prices and gold prices also in the future, but also as we have stated already last year, we have a price target for the company already closer to $5 to $6. Long term, we can imagine even up to $9, honestly, if we look at the point and figure chart. And so it's really worth to have a look on this fantastic company. Thanks for watching us, and bye-bye from Switzerland.